Hi guys, so welcome to our series of 365 days, 365 concepts. Today we would be discussing the concept of employee stock options, right? So what are employee stock options? Firstly, employee stock options are a form of deferred compensation, right? What is deferred compensation in the first place? So instead of giving more cash out to the employees of a firm, what a company says is that we will give you an option to purchase the shares of a company at a very discounted price in the future. Let's say the expectation is that the company's share price is going to be $1,800 or 1,800 rupees in the near future, 3 years down the line. The company will offer the employee to purchase the shares at, let's say, 1,500 and 1,200, already entering the stake in the company at a profit itself. This is itself the compensation that is being deferred in the future, right? That's the very gist of how employee stock option works. Now, what is the reason? Why do you think a company is trying to do it this way instead of giving more cash? What is it that the company benefits from by doing this? The main reason is alignment of interest. Any employee is basically interested in his paycheck. He or she works from paycheck to paycheck, right? But the main vested interest of the shareholders, that is the real owners of the firm, is to ensure that the share price rises. Their wealth is getting maximized. On the other hand, employee is only interested in his paycheck. So how do you align these interests? Instead of giving more cash to the employee, you offer them shares. So in theory, the idea is if we offer them shares, they would be more productive, the net income would increase, profits would increase, and simultaneously the share price is going to increase because now even the employee wants that the share price does increase, right? So, what is this vesting period that you see? Employee gets his shares at a discounted price after a vesting period. It is basically a waiting period after which we allow the employee to exercise the option. In my example, I also said that the expectation is that the price is going to be at 1800 and the company is offering the shares at 1500 a piece after 3 years. So this 3 years after which an employee is allowed to exercise that option is known as the vesting period. Now I've continuously said that the expectation is going to be that the price is 1800. If it doesn't turns out that way, if it is 1400 and 1300, the employee will not exercise the option. That is plain and simple. Why would anybody purchase a 1400, $1300 or rupee item at 1500 a piece, right? Nobody would do that. So that's how it basically works. So we have clarified vesting period, how an employee stock option works as well. Another feature that is associated with it is the dilution of interest. Let's say earlier there were 100 crore shares of the company. After employees have exercised their option and they have taken shares from the company, the number rises to 105 crore. Earlier, 100 crore shares formed the entire 100% stake of the company. Now it has gone to 105 crores. So the earlier shareholders who might have held 10, 20, 30% now own less of the company. Their stakes have been diluted. That is what we mean by dilution of interest. Next, it says dip in EPS. EPS is nothing but total profit divided by the number of shares. Let's say the net income or profit was 100 crores. Earlier, when I divided 100 crores by 100 crores, I would get 10 EPS. Earnings per share would have been 10. Now, if I divide 100 crores by 105 crores, I would get something around 9.52. So this has led to a dip in EPS. These are a few disadvantages that comes with giving employee stock option plans. But on the other hand, the main focus is on alignment of interest. So if I again reveal the examples and at the risk of repeating myself, if Infosys grants ESOPs at 1500 per share, and if the stock prices to 18 rises to 1800, the employees would gain 300 per share. And the same example that I narrated for EPS is there below. So that was about ESOPs or employee stock option plans. Hope you enjoyed the concept. See you another day with another concept. Thank you.